Alright, welcome back to class. In the previous section, we talked about how to record payments against an invoice and how to make bank deposits. That's how to record bank deposits, payments that were made through the bank, either via transfer or direct check payment and payment, cash deposits, cash we took to the bank for deposit into the bank. So we talked about how to do that in the last section. So in this section, we're going to talk about how to manage our expenses. We have already done that of vendors. We have already done how to set up vendors in QuickBooks, and if you check, you see the video on the channel there, or in the previous section you see it. Now we're going to be talking about how to manage our expenses. So we're going to start with how to enter bills and how to pay bills against vendors. So if you look at it, what are bills? Bills are obligations you receive from your vendor or any other person you're owing to make payment. So they are bills, or there are obligations you receive to make payment. Those things are what we refer to as bill. So we have things like water bill, we have like NEPA bill, we have purchases you made that you need to settle your vendors. So all those things are what we refer to as bill. Now QuickBooks, the same way we have the payment, receiving payment against an invoice, that's the same way we have payment against vendors, against a bill. You can receive a bill when the supply is made to you immediately. That means you know how much you're supposed to pay. So the supplier is going to issue invoice for you immediately. But because you have this kind of relationship with your suppliers, they may supply you goods immediately, because you may call them and say, okay, I need this goods, so, but I need it as soon as possible. Now, because the supplier trusts you, he will supply you those products without minding. The only thing he will be concerned with the quantity. Yeah, he will be concerned about the quantity, and he just supply it to you. So in a later day, he will now send you your invoice. So it happens. Now in QuickBooks, if that is the case, now let's go to QuickBooks and see if that is the case. Okay. Now, if you look at QuickBooks again, you see that everything that has to do with the cost and the vendors are all linked together. So you can see we have from purchase orders. Now, to create a purchase order means just a document you submit to your vendor requesting him to supply you those products, right? Now, when you send that purchase order to your supplier, now the customer has two options. When he supply you those products, now he has two options. It's either he's sending you those products immediately with the bills, or that's it, the worth of those products, or he will just send you those products without their words. Then you yourself, at your own end, you have two options. Did you receive it with the bill, or did you receive it without a bill? So if you receive it with the bill, you now click receive inventory with bill. That means the amount is listed. Now let's see how to raise a purchase order. So to raise a purchase order first, let's see how it works. We're going to raise a purchase order. When you click purchase order, now we have some inventory that we have some negative inventory, right? So we are going to raise a purchase order for those items. When we raise purchase order for those items we are lacking, we send it to our supplier. Then those products will now be supplied to us. So let's say we are going with this. Say we are going with this. We need let's say 50. We need this too. Let's say we need this 30, right? And we need this 40. Now remember, you have to select the name of the vendor first. You have to select the name of the vendor. when you select the name of the date of the transaction, the day you are sending the purchase order. Now when you select the date of the transaction, you now enter the item you want him to supply. So once you're done, you just click save and close or save and new. Of course, you already know the difference between the two. So I'll do save and close. Yeah, ignore this. It's just a spelling check, so just forget about that. So we have raised a purchase order. Now let's see. We receive this item from our vendor. So when we click receive item, we have this. Now we're going to say, okay, what is the item? Who is the vendor? We select this vendor. Now automatically QuickBooks will dictate that, okay, we have an open purchase order for this vendor. So do we want to receive against one or more of these orders? We'll say yes, we want to. Now, so you now select this, you now tick it and click OK. Once you do that, you can see that this is a purchase order. So you still have an option here. Did you receive everything the person you asked for? If you receive everything the person they asked for, you can just click. If you receive everything the person supply, everything you asked for, you can click yes. If you did not, that is where you have an option. You say no, you don't want to receive it against that invoice, against that purchase order you raise. So it will now change to another bill, as you are receiving the item with bill. Receiving the item with bill does not mean that you have paid for the bill. You have paid for those items. It means that, okay, you are now aware of what it costs, the cost of those items. That is what it means. So you can see now, what is the date of the receive? This is the date of the receive, the day we receive the item. Then the reference number, you can decide to put the reference number on the purchase order. The memo, you can do the same thing. Now, to also help you check, you can now put the terms of the order, the terms of your agreement with the person. So you can say do on received. So if there is this thing, if the terms applies, if there is discount applied to that, you can see the very moment you select terms on receive, if you say net, so the discount column will automatically appear here. So that means discount date will be here, and anything that you do, any receive, if you pay within this period of time, you now see that, okay, you receive this discount. So let's go with do on receive. So once you do that, you now say save. You now say save and close for now. So you can see you have changed the times for the 7up PLC for this transaction. That is because of the times I changed here. You can just go yes, we are aware of this. So once you do that, you have, so we have successfully received an item with bill in QuickBooks. So if you want to see how that transaction went, you can come to your vendors here and check bills tracker, and check your bills tracker. Yeah, bills tracker. So you can see we have one overdue bill to pay for to our vendor, and we have the one we just raised, which is this. So this is the open bill we just entered now, and we have one overdue. So that is how to enter a bills in QuickBooks. So let's go back. So we have seen how to check your overdue bill. So if you don't want to come to this place, you can also click bill tracker here. You see it. So this is the bills that are due for you. So let's go again and create another purchase order, or let's say we receive item without a bill. There is no much difference. What this means is we are receiving the item immediately. Maybe this vendor, let me just use instances where you like, okay, you saw a new company came to your office and they just advertise a product for you, and you yourself, you like their product, you want to give it a shot, so you just decide to, okay, let me patronize them. So you can say, okay, let me patronize these people and see how it goes with them. So I just want to show you some difference. Now you can see that up here, when you say receive item with bill, you can see that we have enter bills, right? Enter bills, that we are receiving item with bills. Now if the item is without bills, see what will happen. See, it changed from create item receipt. That means you have received this item and you have paid for it. So that's the difference between the two. So let's say this is the one we want to. We are receiving this item. We are saying these two. Let's say 50, and the date and everything we have entered. So we have now, this is item received. Now we are receiving this item. So we just say save and close. So you come back to your bill tracker. Now if you come to your bill tracker, you see that you have this item. It will, of course, it will be open as this thing, but the difference now is, instead of you to see pay bill, you are now seeing you have paid for this item, though it is still a bill, but to effect it so that it will reflect that, okay, you are not owing. So that is what we are going to be seeing, how to enter bills. That's how to make payment against bills. So that's what we're going to be looking at. Now if you come back to the desktop, you can, from your bill tracker here, you can pay your bills. The action, you can click pay bills, right? You can click pay bill, or you can come to your vendors here. You can say pay bills. So when you click pay bills, now these are the bills, the two bills that are due. I told you that that other item has, because it was received, it is a bill. It is an open bill, but it is received. It's just like an immediate payment that you made, but it's still a bill. So let's see. When you check this, let's say this one is the one you want to pay right now. The date of the payment is show all items here. Due. If you change this, if you change which bill to show your current selections for the bills, because I selected one. Yes, I'm aware of that. So when do you want to make the payment? Remember, payment date is actually very, very important, so that it also reflects your bank account and to ease reconciliation processes. So if you select that, if you change the date, you can say, okay, this is the date I'm making this payment. Now if you come down here again, discounts and credit information for the highlighted bills. So is there any discount for this person? Is there any discount you'll receive for this? Because this bills is long overdue, I don't think there's any discount to be applied on this, but we're going to see how to apply discount on that discount received, discount you were given by your supplier also. So we're going to see how to do that. Now payment dates. The payment date is this. Method of payment. How are you paying this payment? How are you paying this? Through check, right? Now, to be printed, do you want to print it or do you want to assign check number? So we say assign check number. So we use that check number to track. So that is it. Which account are you paying for? You're paying for, you may say you're paying from this account. And do you want, did you know that you can select a default account, blah, 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 all this? Yes, you can just read on and click OK. So you are paying from this account. You select the account you're making the payment from. So this is the account you're making the payment from. So once you are done, you now click pay selected bills. Once you click, now this is giving you the option to put the check number. Let's say our check number is 0032. That's our check number. Let me make it a 6-digit because it's up to 6. So let's do that and say OK. Once you're done, you can see this is your check. It has been paid. So if you want to pay more, you can click pay more bills or you click OK. Now we have clicked OK, and you can see that we have unpaid bill. Our unpaid bill is these two bills. Now this is the one we raised just now, and this is the one we receive as an item. So if you come now, we are going to enter, we are going to clear this so that it is no longer going to be it's no longer going to be a kind of bill. we're going to pay because it's not it's item we receive immediately. That's why we are seeing this. So it's not something we raise purchase order and receive bills later. So let's see. Now let's see how to enter the bills against those. Now I can see that enter bills against inventory. You can click enter bills against inventory, select this. Yeah, show item, receive item. So once you do that, click OK. Once you click OK, you now see this is a okay. Let me explain. Let me not just do it for doing sake. What we did here, QuickBooks has a way of doing things. If you enter a bill in QuickBooks, right? If you receive an inventory in QuickBooks, the command is usually different. I showed you. I said if you receive an item with a bill, the name you're going to see here is going to be enter bill. That means okay, you have received the item later on or from your purchase orders, so you are going to enter the bill here so that QuickBooks will start tracking it immediately. If you just have a purchase order, it is not yet a bill. If it is just a purchase order, it is not yet a bill. I'll show you what I mean. Let's go back. Let's raise another purchase order. Let me show you. If you just have a purchase order, it is not yet a bill. Let's say this. Right, all this information you already know them, you can just fill them. I like to uncheck this because I don't want to be receiving this print reminder, right? I like to uncheck the print later and email later. I like to unchecking it. I don't want to be receiving this as a reminder for me to print whatever. So let's say this is it. You have filled this place, you have filled the date, you have selected the vendor, and you now save the purchase order. So when you do that, if you come to your bill tracker, you will not see it because it's not yet a bill. You will not see it, but you will see it. It's supposed to show purchase order. Okay, you see it here. That's unbilled. You can see under the unbilled we have one open purchase order. So if you now click on it, you now see that this is the open purchase order we have. So you have the option to convert to bill from here. Right, you have the option to convert this purchase order to bill. Right, so let's go back. Let me show you what I wanted to show you. So if you receive an item with bill, the prompt here, that's the dialog box. The dialog box here is going to be different. It's not going to be the same. It's going to show you enter bill, right? But if you receive the item immediately, that's without a bill. That's what it means. Entering item without a bill, that's you're receiving immediately. All right, so when you receive the item immediately, the prompt you're also going to see is going to be different. The prompt you're going to see is going to be receive item. Now we have received this item. It's still a bill. We have received it immediately. Those vendors came to advertise, and because their advertisement skills or their marketing skill was very sweet, and we want to give their product a try, we decided to patronize them to have a couple of their products listed in our shop or in our store. So that is what it means. We have received it, so we are still going to pay them. Right, we're still going to pay them, even though they are new customers, even though they are new vendors. They will still leave the product because they already know your shop. They want to create that market, customer relation, that's new customer relationship with you. So they won't bother. They will deliver the product. They will leave you with the product and go for their marketing, and later on they'll come back and receive their money. So that is why we are using the receive item. That's enter without a bill. That's enter without a bill is just like the same thing when we say create and sales receipt. Right, sales you make immediately and you receive the money instantly. That's where that is how this one also works. So when you look at it right here, you will see that here it is no longer enter a bill, just like we have here, it's no longer enter a bill. It is now it's no longer enter a bill. It is now create sales receipt, right? You can see this is enter a bill, but when we are using the receive item without a bill, what we see is no longer going to be bill. It's going to be item received. That is what we are going to be seeing. So we are still going to be recording. It is a bill already. We are still going to see how to record the two transactions. Now I showed you, I say if you come to your bill tracker, right? If you come to your bill tracker, one of it is going to be pay bill. The other one is going to print item receipt. Why? Even though they both are the same, but this one is giving you option to pay your bills and this one is giving you option to just print. So this one is the other option to just print because you receive the item. This one was not a bill, even though it is still an item. It is this money you are owing, you need to pay, because look at it here, it's under unpaid bills. But the method we use for this item, the method we use to record this item is not the same with the method we use in recording this, right? So like I said, receiving payment against an invoice and receiving cash sales payment when a customer just from a one-time customer is all different thing, but they account for the same thing. They are all accounting for revenue, right? So that is what we are going to have here. If you look at it, so that means the way you're going to treat the two transactions, the way you're going to treat this bill and this bill in settling it is not going to be the same. Let's go back. So if you come to your enter bill, now this enter bills against inventory, it is not for bills you receive. It's not for bills you receive with it's not for inventory you receive with bills, right? It is for inventory you receive without bills. That is where you have this enter bills against an inventory. So you can see enter a bill for items you have already received, right? So you can just go there and say select the company, the vendor. You say this is the vendor, right? I think let me be sure that is the vendor that we receive item from. Okay, that's the vendor. So let's go back and do that. So let's go enter a bill against an invoice. Now be looking at this box, be looking at all these places. Now once I select the vendor, you can see now what is showing me. You can item receive. You can see now item receive, bills to follow, right? So that is what it's trying to say. So let's say that is what we want to do. Use item received date if that is the case, or otherwise you can just change the date from here, but that is it. So you can just go and say click on it and click OK. So once you do that, it is now going to convert it properly now to bill. It's not going to convert it properly now to bill. So once you do that, you can just say save and close. You can change the date, you can do whatever. You can say save and close. So you can see you have changed the transaction. Do you want to record your changes? Yes. So it's now converting, it has now converted that receive item to a proper bill. So you can see it's no longer receive item. Now you have the option to pay the bill. You have the option to pay the bill. So that is how to treat this transaction. Anyway, I will see try to do another class that I will just show you the effect, even though this one is like a self-explanatory though, but I'll still do a video that will show you the difference. So that is how to record that. So now you have the option to pay these bills, right? So Another question you should be asking, you should ask yourself, say, okay, why is it that when I came here and I selected this vendor, remember that this vendor also has an open invoice, but his name, let me say this vendor now, this 7up has an open invoice, but the name did not apply. That is where you have to understand and say, okay, this place, this enter bills against inventory is not for bills, receive inventory with bills already. It is for this that you will receive inventory without a bill. So when you do that, what you're trying to do here is converting that inventory you receive without a bill to a bill so that you can be able to make the payment, right? So that is how it works. Even though QuickBooks automatically start tracking it immediately you receive that item, but the only time you have the option to pay that bill is when you convert that item, this item you receive without a bill, to a bill. That is when you start that is when you can have the option to make payment, to pay for that bill. So it's something very delicate that you need to pay attention to. That's why anybody that is teaching you QuickBooks and doesn't have experience on how these things are done, you will find it difficult. You will see that you record this transaction, but you're not seeing the option to pay because you do not understand the flow or how it works. So that is how QuickBooks operate. So in the next section of the video, I'm going to show you how to make payments, how to pay these bills actually. All right, so see you in class.